Welcome back to Macro Crazy, you capitalist pigs. Today, we're not going to do the normal summary of the week since it was such a light week. We're going to cover 13F reports. And you might be like, okay, what the heck is a 13F report? Good question. Every quarter, within 45 days after the end of a quarter, hedge funds with at least $100 million under management have to submit a report, 13F report, that identifies their positions. And Goldman Sachs has been kind enough to basically summarize everything and provide some highlights that we're going to go over. Okay, so I'm showing some of the key themes here that Goldman highlighted. Number one is that the hedge funds are doubling down on their existing positions, and that is simply a function of their uncertainty about what to do. Hence the kind of deer in the headlights cover image that I used. Funds don't always have the answer. Sometimes, they do. They've done their quantitative research. Other times, it's an educated guess. And sometimes it's just gut instinct. So who knows what's driving it? But right now, they're not sure. And they're just doubling down on existing positions. Okay, moving down, turnover is down to record lows. Again, a function of uncertainty. Other than doubling down on existing positions, the funds are hesitating on what to do. Next big theme from 2022 is that funds were moving into consumer staples and away from consumer discretionary. Not a shock. They were also moving away from momentum plays, and they were moving away from tech as well. Additionally, this is kind of a surprise, is that they've become short energy. This seems a little odd, but funds are notorious for flipping entirely views and positions. So I wouldn't be entirely shocked to see them go from net short, or this being one of their biggest short plays, to being a long position in 2023. But definitely keep an eye on it and be aware that the funds are short energy right now. And finally, they're also buying more of the industrials, like the real economy. So that could be another play that you could think about, real economy versus digital economy. One other bonus theme I'll add to this list is that the funds have paused on their selling of Chinese ADRs. So is that a sign of the bottom in that? Not sure. But with rumors of China reopening, even with the riots going on currently, it might be something to take a look at because obviously those have gotten absolutely murdered. One more tidbit from the Goldman report is that the concentration level in the portfolios is at a very high level. In fact, other than one other time in 2018, this is the highest level ever. The top 10 positions of funds account for nearly 3/4 of their portfolio. So something to be aware of. If they have to sell any of those top positions, they're gonna have to sell a lot. So we've already discussed themes, and now let's talk about maybe some specific ideas. I'm not recommending these, but maybe worth looking at. One I mentioned was obviously the real economy versus digital economy. Outright positions can be dangerous, so maybe a long short might be worth looking at there. Another idea, I've discussed this before, is potentially buying Walmart and shorting Target. Target is more consumer discretionary, which is consistent with the theme that Goldman is talking about. And Walmart depends on groceries, which I think is 50% of their revenues. Obviously, people have to eat every single day, so that would be a staple. So that's something else you can look at. And given Microsoft is now topping Amazon in the funds as the fund's top holding, you could potentially look at buying Microsoft and shorting Amazon, because again, Amazon is more discretionary, even though they're a goods company, and Microsoft, you need Office, to work. You need Office to do your side hustle. Additionally, Microsoft and Amazon have overlapping businesses. Cloud services reportedly was slowing for Amazon, so I would assume that would spread to Microsoft. but they have stable revenues elsewhere, like the recurring revenues from software licensing. So Microsoft over at Amazon would be something else to look at if you are interested. Okay, to summarize, the funds are not any more sure than you are about what's going on, and they're just taking their best guess, trying to develop themes. And I would recommend you do the same. Just develop your themes, top-down view, and then trade accordingly, and be disciplined about cutting your losses. And I think you should be okay. Hopefully that was useful. This is another part of the new series I'm starting under more education. Next week we'll return to summaries of releases and what's going on, but I will try to sneak in an additional educational video each week, including stuff like what is macro trading, why does macro trading make sense, what are the sectors or types of stocks that are benefit from certain types of releases. Okay, hopefully that was all helpful and you got something out of it. Let me know in the comments, subscribe, like, all that stuff. Take care.